So in this video, you're going to learn about the generally accepted accounting principles. The first aspect, which we had seen in the structure, where we have business entity concept, dual aspect concept, money measurement concept that we will see here. Coming to coming to the first business entity concept. So business entity concept basically speaks about business is different and the owners are different. That is the core concept of business entity concept. So you know what happens earlier days, uh, we have only one set of accounts we are supposed to prepare because sole trading concern will be there, where this only one person will be the owner of the company and he is not responsible to anybody. He is not supposed to tell his incomes and loss to anybody. So he will consider his personal incomes, his business income towards he makes everything. What happens when such a mixing of personal transaction with the business transaction happens? It is not it is difficult to ascertain the result of the business. Initial days where the proprietors will be treated as a center of accounting, and the private transaction and the public, that means the professional transactions, will be jumbled or mixed, and which enables to not which enables an individual to not to have proper understandability about how the company has been performed. So that's later what happens. We have joint stock company concept, where large number of persons and the institutes have been scattered throughout the world, and they are having different interest. They are having different needs of financial information, and the need for this need for financial information created a need for having a separate set of books which is meant only for the business transaction. So now, because of joint stock companies concept, now the company started to have their books of accounts which is meant for only the business transaction. And that is what the concept of business entity concept speaks about. Okay, so under business entity concept, you need to treat the business different and the owners are different. Owners transaction cannot be merged with the business transaction, and business transaction cannot be treated as a owner's transaction. And moreover, because of large number of joint stock companies, large number of owners, all the owners cannot manage your business, right? So there is a need of having separate management team. So these separate management team which we are having, only managers, they are held responsible for the application of the resources which have been entrusted to them. So they are responsible to account, they are accountable for the account, means whatever the business performance we are having. So how the business is performing, who is responsible, who is accountable, the managerials. So and the business organizations have been recognized by their names but not by their owners. They are considered and treated on par with the natural person. See, so business entity concepts basically tells us to treat a business different and the owners are different. Business will be run in its own name, not in the name of the owners. So business is different, where you are supposed to record the transactions of the business only, not of the owners. That is the concept of business entity. If you illustration I have quoted here, each company they need to maintain the books of accounts, and these books of accounts will consider only the business transaction as the transaction of the company. And the owner's transaction, like owner, if an owner have purchased a car, that we cannot show as a car of the company. If the company had purchased the car, then that will be the asset of the company. So that is the concept of business entity. So the expenses relating to the business will be treated as the expenses of the company, not of the owners. In the same manner, if the company had earned revenue, then that will be treated as a revenue of the company but not of the owners. In the same manner, if the assets have been acquired, as I quoted, if a car has been purchased by the company, then that will be the company's asset, not of the owners. And if the owner had purchased it, that is none of our business. And in the same manner, if the loans have been raised, that will be considered as a liability of the company and not of the owners. So this is the concept of business entity, where business is different and the owners are different, and business and owners transactions cannot be merged as a single transaction. Only the transaction which pertains to the business will be treated as a business transaction. So that is the concept of business entity. So here also the same thing I had quoted here. So this business entity concept we will see from one case which had happened, that is Solomon versus Solomon Company during 1897. So here from this we got a clearance about we need to treat business transaction separately and the owner's transaction separately. So this is what about business entity concept is. So this one is about going concern concept. So first I tell you what exactly going concern concept is. So going concern concept is going concern concept is nothing but it is an assumption that the company will run for longer period irrespective of whether the owners are there. Owners may come, owners may go, but the company will run for a longer period. That is the core concept of going concern. So going concern, the concern means company, going means run. So company will run for long. That is the concept of going concern. So it is also called as continuity concept, perpetuity or perpetual existence. See, company is a artificial person, right, which has been authorized by the law, which has been legalized by the law. And company being an artificial person can run for a longer period whether the owners of that company will be alive or not, because owners may come, owners may go, but the company will run for longer. That is the core concept of going concern. So why this concept has been developed, earlier there are very few organizations which has established either for a particular objective or for a specific purpose, for a specific period. After that purpose have been served, after that period has been done, this they liquidate their business. But right now almost all organization what we are seeing, they have established for a long years, right? They are still continuing their business activities. They're continuing their business in future also. This concept of continuing their business in future also from long time, that is going concern. So the reason why they are continuing for long, they do not have the intention of winding up of their business activity, because they have not planned to wind up their business. They want to continue their business because they are having good profit, they are having the resources to continue their business, so they are continuing. So and moreover the intention is not to liquidate, and the owners cannot say anything. The owners are just a part of the company, and they can't say whether the company has to run for long or not, because the company's sustenance, company's survival depends on the profitability of the company, the resources that the company is having, and the opinion of the management whether to run the company or not. Even though the owner's opinion also matters, but it matters at the end, and there is no evidence to show that the company is going to liquidate. Like if the company is not having losses, okay, for long years the company is having profit history, then obviously no one want to liquidate. They want to run their company for longer. So when they do not have the losses, that means they will be viewed their company as a continuing one, and they run for long number of years in future also. So this concept of running the business for long years due to the factors of having a intention to run, having a profitability, not having the losses, not having the intention to liquidate, all these are the reasons which have created to the development of the concept, that is going concern. So this when the company, we assume that a company is a going concern, means it will run for longer period. Then international accounting standard boards in its IFRS, they have stated the companies to prepare their financial statement as a going concern, unless the management intends to liquidate or has no other alternative but to liquidate. Say what this point is telling, you have this what we call so you have you need to prepare financial statements. So when you prepare financial statement, you prepare financial statement at the end of every year, like accounting year, 1 year end, you prepare financial statement. If your company has to liquidate after 5 years, what happened? You need to close your company, you need to close your books of accounts. All the financial statements have to be closed down by the end of fifth year. If you are running your company even to the sixth year, then that's why we prepare only financial statement for a particular year, that year's transaction, and last year's we carry on. Otherwise if there is an intention to liquidate your company, then all the share capital you need to give back to the shareholders. If you are having the loans, you need to repay everything. Everything has to be settled, and in the next year you need to start afresh. But right now, because of the concept of going concern, what we do, we will transfer the value of asset to next year. Even we will transfer the capital to next year. We will transfer our what we call the liabilities to next year, right? So that is because of going concern. So because IASB in their financial statement, IASB have opined to give have opined to prepare their financial statements as a going concern. The company have to prepare their financial statement by the end of the year. And if the entity has the history of profitable operation and they have the financial resources to run the company, then that company will be called as a going concern. If the company do not have the history of profit and they have ability to get the financial resource, then we need to analyze whether from various perspective. We need to know from the next for the next 12 months whether they are able to repay their debts, whether they are able to get finance for their resource, finance for their business, whether they are able to meet their current and expected profitability. If they are having a positive say for these things, then a company can be called as a going concern. If the outcome of this is positive, that is we can call it as a going concern. If the outcome of this analysis is negative, then the concern will has to be liquidated. So here the business organizations will be assumed as a going concern because they continue their business for a number of years foreseeable. And besides that, it is presumed that the business concerns continue their activities more or less in the same form, with the same objective, obviously. And therefore, one of the most important feature of corporate form of business organization is their perpetual existence till such time as they are legally liquidated. So, if the company is having opinion of running for a long period and they are running with the almost same form with the same objectives, then such a company will be legally they have perpetual existence until unless they have to be liquidated from law itself. So perpetual existence refers to having a long existence, legal existence, until unless legally they have to liquidate. This is the core concept of going concern. So this going concern concept or the assumption leads to the emergence of two more accounting features. They are deferral of expenses and cost based accounting measurement. Because of the concept of having going concern, you know what happens, we transfer the expenses to the next year, expenditure to the next year. See, advertising expenditure if we had, we will transfer for next 5 years. Assets value we transfer for the next 5 years. Why we transfer? Because we believe that we will run for next 5 years. Understood? In the same manner, one more accounting feature which has been developed, that is cost based accounting measurement. Because of going concern concept, cost based accounting measurement has been developed where the assets we will record at their acquisition cost, even though we will depreciate that over a period of time, but the original cost of the asset we will record. Why we record? We record because of the concept of going concern. Next we have money measurement concept. So money measurement concept, what it speaks about. So money measurement concept basically speaks about you need to record the transactions which are of monetary in nature. That is the core concept of money measurement. Or monetary unit concept. So in ancient period we have barter system, and in the difficulties of barter system, we cannot have a proper measurement, because if I need a pen and one more person need a book, we will exchange pen with a book, but pen and book do not have the same monetary value, because we do not have a proper medium of measurement. Barter system poses a certain problems. Later what happened, there are some medium of measurements have been developed, that is nothing but money. Money came into being as a medium of exchange, and when we have money as a medium of exchange, now we can measure the transaction in terms of money. That is money measurement concept. So in accounting, we do the computation of profit. How we calculate the profit? Sales revenue minus cost which we have incurred. So when we do that, we will get the what is the value of profit. So this value of profit we need to show in terms of money. And the assets we are having, like all those assets also we need to show in terms of money. If we are having the liability, then liabilities also we show in terms of money. So that is the concept of money. So the money measurement concept, shortcomings of this money measurement concept, this the scope of this accounting concept is restricted to the money-based recording and excludes the non-monetary attributes like industrial relation, market monopoly, etc. So in our financial statements, we record the transactions which are of money in monetary in nature, but we do not recognize as the non-monetary transaction. That is the shortcoming of money measurement concept. And this concept assumes money as a stable unit, but in reality money is not a stable unit. It will changes by the passage of time. Money is not a stable, but if you are using money measurement concept, you believe that money is stable monetary concept, which is again a shortcoming of this money measurement.